Hello and welcome to Electripreneur Secrets, the Electrician's podcast. We're here with you 5 days a week to help you master sales, simplify pricing, and deliver premium level service. When I say simplify pricing, I'm talking about the exact action post we put on Facebook yesterday, this value piece about the service rate and the anti-price book method. To refer you back to a prior episode, we actually did an episode called F price books. I didn't know if I was going to swear there or not. So
I know. I was
books.
wondering. I was checking you. I was going to say, hey, I wonder.
I didn't drop it yet. Anyways, guys, this stuff will help you. Again, we're here with you every day to see you rise. So today is no exception. This is the end of our current 3-part series on cash management secrets for electricians. I'm your host, Clay Newmeyer. If this is the first time you've ever been, sometimes they call me the pleasant peasant because I'm so Canadian, so pleasant. And this is my partner, as always, Joseph, the sales bot, Lucani. And we call him the sales bot. It's been following you for a while. Yeah. You seem to know a thing or two about sales.
I'm moderately adequate, yes.
Moderately accurate. Okay. One of the reasons I love this topic of cash management is that we're all dealing with this every day. And there tends to be a philosophy that sticks for like 80% of the population. And that is to like ignore the frameworks and ignore it, and it's just going to kind of go away. Things will add up. Yeah. Everything's going to be okay. The bank account balance says we're above, so things are all right.
It is so sad and yet so understandable at the same time, because very few people understand money, and as a result, we're afraid of it if it's a loss. And the things that we're afraid of, we often run from. Even if it's better to say, I didn't know. Sometimes not knowing is enough of a reason for someone to say, I'm just not going to check. That's my accountant's problem.
Yeah, absolutely. And we got Brian Peasy live with us in the Electripreneur Facebook group. Said he's checking in from the attic. There's your honorable mention, Brian. Thanks for joining us. And I have the first cash management secret for you.
Ooh.
The attic's not a great place, but there is some cash up there too.
Right, there is.
So I'm happy you're out there embracing that, Brian. And he says just 81 in Sacramento, so not too bad. We got a big cheers from him. That's excellent. Thanks for joining us. And to all of our followers who so consistently join, just thank you. Big moment of gratitude.
Amen to that.
Absolutely. I got off track a little bit, but today we're actually going further into Michael Michalowicz and the Profit First methods. Many people have read this book. Many have bought it and it's still on the bookshelf and haven't read it yet.
Yuck.
There's a couple ways to dissect this thing, but what we can tell you is big advocates of Mike and all his work. There are some really helpful things in this book. I feel there's also some challenges to it, especially if you're early entrepreneur, just getting into business, or in that first stages where you're still wearing too many hats. You don't quite have the financial help. Joe, what's been your experience with some of these methods? And just generally speaking, how do you like it? How has it helped you?
Sure. Thank you for the setup on that. I appreciate it. So I absolutely love this book, and I adopted its principles into how I ran my business. And it really was a paradigm shift, because the way I always understood it prior to it was money comes in, money gets spent, whatever gets left over goes into the savings account. And it made sense for a lot of people, right? Bills are there, collectors are there. Everyone's like, oh, I need money, 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 money. And you would just pay it out. But because you would do it that way, you never really had complete control over how much was being allocated as profit. And the scary part of that is sometimes the end of the year would come around and it'd be a lot smaller than you thought it was. And now you're wondering how I'm going to run the company on this, when I thought it was here and I got something here. What Mike talks about is doing something different. The actual name of the book is called Profit First. Now, what that means is it's almost the concept of, any of you guys are financial investors, you might be familiar with the concept of pay yourself first.
Yeah, I love that you went there. There's a perfect parallel with personal finance there. It's awesome. Well
exactly.
done.
Yeah. So the thing is that when we have a situation where we're paying ourselves first, it actually is the absolute best accountability thing you can do for yourself. So let's say, sake of our, I'm going to use round numbers, and this may not apply to you.
Yeah.
Let's say you're going for the low of 33% average profit, right? But it could be higher, it could be probably a lot higher, but let's just say we're starting there. You know that every dollar you get paid, what you do is you take 33 cents and you automatically make a transfer to a separate account. Now, the benefit of this account was that it's meant to actually, we actually went to the bank and we had them put a lock on it. We said we
Nice.
cannot access these funds for anywhere for 60 to 90 days.
Wow.
We
Good
can't
news.
touch it. It has to stay there. The reason being is that when you take your profit and you put it aside, you're forced to pay those bills with everything that's left over. And because you can't access that money, you're forced to get creative. And a lot of what it showed me was that they were expenses that we had that we thought were essential. But then when you got sitting down, you're like, all right, I only have $15,000 and I've got $20,000 worth of bills. What am I doing here? You find really quickly what you don't need and what you're able to cut. You start working smarter, because if every single one of us had our nose to the grindstone, eventually we get worn down as well.
I love that.
Awesome. So what I learned as a whole from this is it taught me to recognize that if we don't pay ourselves first, no one else will. The government sure is not protecting us. Other people, the only people who are going to give us a loan is the bank, and they're going to want their interest on top of it. So it's not bailing you out either. It's just digging yourself in further.
Yeah.
So by paying yourself first, you learn in real time, real freaking quick, what your business actually needs and where the money's actually going.
Yeah, and there's a whole rabbit hole we have to go down. A whole rabbit hole. That's the first time I said it that way, but we got to go down this little tangent here because you're
Yep.
100% accurate in this. And Mike actually refers to this as the primacy effect,
Mm-hmm.
meaning we focus on really that first thing we see and we ignore the rest.
Mm-hmm.
And what he means in that parallel is really talking about we see revenue.
Yep.
We don't really worry about it again. We just let it have this trickle down effect, and whatever happens to that money on the way happens to it, and whatever's left in the bank is left in the bank. And that's the exact opposite of what you're saying. So paying
Yes.
yourself first is actually being aware of the profits ahead of time. And that forces diligence in knowing your numbers a little bit here. And as we say, and I just got to finish this train of thought before I lose
Forgive
it.
me. Forgive
As
me.
we say, like commercial guys, project guys, the last time they ever celebrate on a project is when they get awarded that project. And that's that revenue focus. It's that big number that's up front, and it's sexy. It's cool, right? It's
Mm-hmm.
awesome. Even on service, it's so cool to go out and sell a $10,000 job, $20,000, $30,000 job. But we tend to then forget the numbers after that. We tend to forget
Mm-hmm.
the due diligence to manage that trickle down, and what little bumps or expenses, investments is that hitting along the way, and what's going to be left at the end. That's
Mm-hmm.
what's less sexy, but it leads us to this phrase: revenue is vanity, profits are sanity. Have you ever
Amen.
heard that before? And did I just tee you back up?
You did.
All right,
You really
perfect.
did. The reason being was, I didn't mean to interrupt you. That was rude of me. But you mentioned something that I felt a lot of people who may not have the same concept of money, a visual is always helpful. At least for me, I know they are. So another way of looking at this is Clay mentioned trickle down. We've all pictured tiered fountains before. Even let's have fun with it. Let's say a fondue fountain. Something comes up, it's going to pour out the side and hit different levels. The level it hit first is the one it fills first. And whatever is left over goes to the next one. Normally, profits at the bottom get whatever dregs and garbage is left over, whatever scraps and drops you can drip into it, that's what it gets. What we're doing is we're putting it at the top of the pile so that the only thing that's happening is all the money goes into profit, and then whatever overflows from it goes to the next level. I felt that was a more accurate example for people who may need visual examples of what we're trying to do here.
Yeah, I love that. And I'm going to give this another comparison, and it's from my notes again on Profit First, the book, because Michael goes in to describe and talk about the Parkinson's Law.
Mm.
And Parkinson's Law becomes really relevant when we're doing estimating. especially in projects. Extended duration estimating is hard, right? Like, show of hands, if you're in the van right now or you're on site and the customer's even looking at you, I could see you raising your hand for this. If you've ever tried to estimate something, a labor duration, and been off by any amount. So Parkinson's law then talks about the opposite issue. It's talking about, well, if we extend that estimate too far out, people will always fill that space with work. So they'll always take as long as we leave ourselves. Does that make sense? In duration. So the same happens with our money. And that's why it's so important to know ahead and allocate ahead your profits to a different account. Because if you don't, then it is part of that overflowing bucket with no organization and chaos. And what's left, Parkinson's law applies here too, will be nothing. There'll never be anything left. And that's not your fault, by the way. This world is designed to magnet, vacuum, suck dollars from your pocket. Everyone is out there trying to market something to you. And there's a chance that you're out there actually paying for ads, marketing something to someone too. And it's just trickle down, trickle down, trickle down. That's the whole economy working. But it's never been more prevalent than now, where you can be actually interrupted from your pattern, your flow, your attention every 3 seconds. Something could be popping up on your screen right now as you're listening to us. Right? So that said, the same thing will happen to your profits. They get eaten away and there's nothing left. Whether that's you personally taking extra money, and we encounter this a lot with smaller contractors who don't actually have the personal budget figured out yet. So when we ask them, hey, what do you need to make personally in a year? Some are wise and will say, well, $49,562. Some will say $72,379. And some will say 100, 120. Okay. Right? So as we get looser in that, what happens? We pay more tax. As we get looser in that, what happens? There's less profit left in the company, and this big bucket that you were talking about is depleting. There's nothing left at the end of the day. Or as Jim Rohn, one of our mentors, said, you got more month left at the end of the money than money left at the end of the month.
Yeah.
Have you ever heard that before?
I have, and I never knew that was Jim. I find like there's a reason we call him the late great. He has so much knowledge and such a wide area of expertise. It's almost like I got to just listen to everything he says.
And Nick Knight's with us, says, well said. I appreciate that, Nick. With your vote of confidence, I know we're doing the right thing here today.
Thank you, Nick.
Should we go back to the philosophies of this book? And if you guys have read this, if you've already been exposed to this and you're live with us, please let us know by throwing a 1 in the chat. Happy to hear it and connect with you guys on this. Here's where things go on a bit of a more detailed path, but also where the level you're at could depend on the level of action you would take personally. Because Mike talks about opening 5 accounts, Joe.
Yes.
Having 5 different bank accounts. I'll reference my notes to make sure I get this right. An income, a profit account, a management salary account, a tax account, and a revolving expense account.
That's correct.
In your business, did you go for the full 5 accounts? Did you follow this book to a T?
So I can go off mine because I know for a fact we did 4. But if you give me a second, I can count the amount. I'll count off the top of my head.
Sorry to put you on the spot.
No, it's okay. It's all right. I can come up with at least 4. So we knew for a fact that there was always the profit account. That was the locked account that we weren't able to spend money from. Then there was the owner's tax account, meaning that we knew that we had our taxes that need to be set aside. If they're not set aside, we're personally having to pay for them. We then had a company tax account where we said, all right, any expenses that go from the company, we know they're already allocated, they're ready to go. We then had an operational account, meaning that it's like, okay, this is here. This is where everything's flowing from. I believe we did 4. I don't have the 5th one off the top of my mind.
Yeah, that's fair. And that's where the complexity becomes potential as an issue. Now, here's where I can tie everything together. If you're smaller and the 5 accounts is a lot to manage and that's daunting, guess what? You can still accomplish this same philosophy, the principles, putting profit first with just a couple accounts, 2 to 3 accounts. and still be moderately successful in this
Hmm.
venture, at least until you grow a little bigger and have a little more help.
Correct.
If even that's overwhelming, secret number 2 is right here. Hire help. Get
Yeah.
your bookkeeper to help you with this. Do something. Have more than one account, because otherwise this Parkinson's law is going to take place and it's going to be difficult to manage this.
Hmm.
At the very minimum, right? Especially, I'm going to pump the brakes hard here. If you're a sole proprietor in your business, right? Meaning that you and your company are a single entity, then this is absolutely critical for you to have a tax evaluation of what you anticipate needing to put away. And that could be upwards of 35% to be a healthy guess here.
Hmm.
Otherwise, you're going to get nailed at the end of the year, depending on write-offs and different, again, not a tax accountant, but I would be putting a third of all income away into a savings for tax purposes. Would you agree with that, Joe?
I would. And I think of money the same way I think about wire. And I was taught that I'd rather be looking at it than be looking for it. Sometimes when you do your weatherhead, you better have your 3 feet off the mast. If you don't have your 3 feet, they're not going to connect to it. So screw it. Put 5 feet off the top. What are they going to do?
Yeah.
Same with our money. Make sure you know where it's going. Make sure you can see it. I'd rather look at it than look for it.
Yep. I love that. That's a great tie-in. And I was taught that too, even up here north of the border, right?
Hmm.
Never come up short on wire and never come up short on cash. It's so important.
Hmm.
So in having these accounts now, knowing what that profit amount is and being able to put that aside would be your next best friend. Would you agree with that?
Yeah, I would 100% agree with that. I think that's probably the very first step you got to take.
Now, there's one thing here that we didn't touch on yet, and Mike does touch on it in his book, and it's this idea of a 90-day nest egg
Hmm.
and how important this is. So, this is a piece of guidance that I routinely provide for guys on the inside and on the outs. Anytime we talk about this, there's different opinions on how much should we save, how much should we maintain as operational capital, how much
Yep.
should we have sitting there. And the reality is, I like to look at it like this. If you, by chance, something happened to you today and you broke your neck, broke your back, your hobby is physical, I don't know, something happens, you're unable to work, you're removed from the scene. If you can't pass the fishing test, meaning you're running a well-oiled machine that runs with you or without you, what happens to that machine when you go
It's,
away?
it's going to break down real freaking fast. And so is the number that you see in the bank account.
So in reality, 3 months really puts us in this pretty high worst case scenario outside of serious long-term disability or death,
Yeah.
which I would be talking, this isn't that episode, but I'd be talking to an insurance broker about that
Hmm.
to have a good policy as an entrepreneur, right? So
I
having a
100% agree.
3 month nest egg though is a great idea before you start taking your profit shares from this, before you start taking those bigger dividend checks. Question becomes, well, 3 months of what?
Mm.
If you've gone through the entire exercise and built your rates out, then you've got a lot of these numbers, but your rate might also be built off growth factors, including marketing, including your next person's training, right? Including your professional development. But would you say those are things that could go on hold in the worst case?
In the absolute worst case, yeah. I mean, that's why having your numbers are so important. Like, you know how some people say, like, show me the money? And
Yeah.
they mean, like, where's the beef? Show me where the numbers are. If I can see that you have meticulous notes and you know where the money's going, I'm more confident keeping the numbers tight. I need 3 months of that amount because I know it's backed up. Because if you don't have it, the opposite is to play it safe and to go much higher than you think you need. And that much higher could be a significant amount of money that you better allocate somewhere else. The difference between I need $70,000 and I need $120,000. What could you be doing with that extra several thousand?
Yeah. So ultimately, this one's up to you guys. We really don't know your numbers here on the podcast, but you can dial that in. You can look back down your P&L and decide, okay, what of this stuff could go on pause if I needed to get tight? What is that nest egg number? But I would be working towards that today if you don't have it already. And like
Mhm.
Joe said, for a small shop, that might be 70, $90,000. For some shops that are already doing million, two, three, four, five, that could be a quarter million to 750, right? Expenses do come up quick, especially when you have staff working. But the nice thing is, as you get to that bigger level, you ought to be passing this fishing test. There's really kind of that two goal thing here, right? If we can get this well oiled machine that runs with us or without us, then it doesn't matter if you're removed because you could still be able to help call the shots you need to and delegate all your other duties and have this thing running.
Mhm.
Nevertheless, knowing you have that 3-month nest egg will absolutely set you free in so many ways.
Mhm.
After you've got your nest egg, you've got that number figured out. You know you're profitable because your pricing's right. You know your sales are improving. You've been working on this professional development. Things keep rising. Let's say you needed to save 100K for easy math.
Mhm.
What happens when the profit account then reaches another 100K on top of that? And that's
Now
where
we
this
start
gets
getting
fun.
fun. Yeah, it's funny
Absolutely.
how we thought the same thing. We both thought the word fun was what comes up here.
Yeah. And I love personally, I again, quoting from my notes of the book and how we look at that going forward is to take half for growth in the company, reinvest it, and to take half and treat the shareholders of this business, yourself, your partner, anyone else who's got a seat at the table, treat them with that money because that's what really feeds this is people. And those
Mhm.
people needed to be treated well with that as well. Does that make sense?
And I want to call a quick pause here for a moment.
Let's do it.
I'm not going to say any names because someone might know them, but I want to. You mentioned treat your employees, and I want to make sure it's very important, right? I was working for a company way, way back in the day, and they achieved $6 million a year. And it was one of those things where at the time I brought in $800,000 of that year, and I was like, great, we're all going to get bonuses, everything's going to great. They're telling us that they're going to throw us a party, right? Turns out the two bosses kept all the profit, and we got treated to a lunch that was homemade while also working. We had to still answer phones while that was going on.
Wow.
So the funny thing is that you need to take care of your people, but you honestly need to make sure that you're doing so in a way that makes them say, yes, this lines up with the amount of success that we've currently received. So if you're talking about treating your people, make sure if they understand the scoreboard, that they also understand what fair compensation would look like.
Absolutely. Yeah, I love that. Great example. I want to give you another example. Now I'm going to lean out of this financial and your savings and deep diving on your guys' numbers. I know that there was some nuggets in that, but now knowing your costs again, I just want to circle back to this because there's this example that I absolutely love, and Mike Michalowicz talks about it in his book too. Yesterday's episode, we talked a bit about managing your expenses and
Mhm,
managing cost of goods sold.
mhm.
As your company grows, small little efforts have massive waves of impact. Would you agree with that?
Oh, 1,000%. It's like one of those things where, okay, good example is small examples. Let's say you're in the back of your parking lot and you notice that occasionally you see screws and garbage on the floor. Big effort is you go outside, you say, everyone, 5 hours, we're all going to go out there with magnets and we're going to clean everything up and it's never going to happen again. Small action is every day you walk past your van, you pick up one handful of things, you throw it in the dumpster and you go inside.
Right. So here's
Small
a
actions add
financial
up.
example. Did you know that UPS, the shipping company, has their GPSs programmed so that they minimize left-hand turns?
Why?
Because internationally, that company is so massive that what they found is left-hand turns tend to have lights, right? So there's time. Left-hand turns are actually a longer distance. So there's additional tire wear in kilometers. The time and distance also result in increased fuel spend, right? And that statistically the most common accident is in a left-hand turn. So
Holy
also
shit.
damage and repairs. And by cutting that out, they've actually saved hundreds of millions of dollars a year internationally by avoiding left-hand turns in their GPS.
My mind just blew. I feel like you just shot me in the head because my brain is across the wall on this at this point.
Isn't that crazy?
That's insane. The amount of detail that it took. But honestly, I'm kind of impressed because what that shows me is that the operators that are doing it have meticulous numbers, but even more so that they have an understanding of their technicians and their roots. So
Super.
you understand your people and you understand your numbers, and now you can make moves that benefit everyone.
Yeah. And that ties perfectly into what Toyota Manufacturing actually came up with this, and they called it Kaizen,
Mm-hmm.
which is Japanese for constant, never ending improvement. A place for everything and everything in its place. This is something we learned about in the MBA program, and it's such a powerful topic because that's what UPS did. Constantly just looking at the numbers, measuring and managing, like you said, everything can be improved. It's just these little steps that add up to multi-million-dollar rewards.
Mm-hmm.
I'll give you another example, a little more threatening, life-threatening, a little more dramatic. Hospitals that we studied, we did case studies on hospitals that literally were losing lives because ER Department 1 and ER Department 2 were 300 yards away and the doctors weren't getting to people in time. Like literally just the craziest things. So they rearrange a department and start putting things in marked places. They shorten the walk time. All of a sudden, they're seeing 10 more patients a day. All of a sudden, people are dying less. Now, that's on the grave side, pun intended.
Mm-hmm.
But in our business, these are the little changes that add up. Sticking back to the cash, sure, this might only be $100 we're talking about today. But what about in 10 years from now? If you'll ignore a $100 benefit today, and then next month, and then every month after, that's a $1,200 year, a $1,200 deficit that you otherwise would not have. And what
And over
about 10
time.
years?
And then what could you have done with that? Like, my logic is if you're going to spend it, how could you invest it? My financial mentor taught me that your money has only one job, and that's to go out and make it more money.
Mm-hmm.
That's all it's supposed to do. They're little soldiers that are meant to go out and multiply. It's all they need to do. So if you're sitting there with $100 deficit, my mind says, if I were to take this and invest this into a mutual fund, or I were to take this and put it into an index fund, just $100. After 10 years, what are we looking at? Tens of thousands of dollars are set aside.
Absolutely.
What could that have been doing for us? What kind of interest could that generated over time?
So impactful. Okay, so today I just want to summarize us because I do have a meeting in 5 minutes. Today we've talked about some really powerful stuff, including reflecting on profit first, Mike Michalowicz. We've done that several times through this series. But I think fundamentally what you said in the beginning is that personal financial parallel
Mm-hmm.
and this professional financial parallel and how they're very much the same, and paying yourself first,
Mm-hmm.
knowing what's left, right? If we didn't have the taxes broken out from our personal pay, if we didn't account for losing 30% to the government before we had to pay our bills, what would happen?
For lack of better words, we'd be fucked.
We wouldn't have enough to pay the bills.
Yeah, someone's got to pay for it, and they're coming for it. We all know the IRS, the Iceman cometh.
Yeah, exactly. So shouldn't we have that adopted in both? Because as one of my other mentors says, how we do one thing is how we do everything.
Mm-hmm.
A financial framework in your personal life and a financial framework in your professional life.
Mm-hmm.
And if you've read this book, if you've listened to this series, if you've began to invest in your own financial literacy as per our action items from prior episodes, then I know you'll be better off. And we just added thousands, if not tens, if not hundreds of thousands to everyone's wealth just from listening and taking action on these
Mhm.
episodes. What do you think
Mhm.
about that?
I think this is awesome, and I'm honored that I get to be a part of it.
All right. So, action, all-star action.
I have a solid action. I don't know if it qualifies for all star or not. Can I take it on action?
Let's hit it.
All right. So I know I talked the other day about getting your own credit card, right? And changing it and figure out what it is. But I want to stress why and also a practical example of how. Would that be fair?
Yeah.
Okay. So we understand that in order to understand your numbers, you need to know every single one of them. The problem is there are so many microtransactions that happen. Like, think about it. You have your Apple Music, you've got the apps over here, you've got this program, $20, $15, $5, $2. They add up. They add up. And the point of them, and unfortunately, a lot of them are meant to not be noticeable. They're small amounts under millions of people, and that's why they're successful. The reason why I suggested get your own credit card and cancel the one you're currently using and get another one is because it will show you all these little microtransactions, and then you can now take actionable steps to do it. Today, I want to give you an extra step that we can take that will often help you as well. This is actually, it may even be a high level skill, but it's helped me phenomenally.
All right.
So, what you do is you're going to get a credit card with cashback. What you can do is if you're making expenses, right? You're using the card for your business, you're going to accrue a certain amount of cash back. You can program your card to auto deposit that into a separate account. And from that account, you can suggest auto investments into mutual funds and programs, meaning that every dollar you save without you even knowing about it is getting allocated towards an investment program. If you could do that, now that $100 you didn't know where it was, 10 years from now, you're sitting on tens of thousands because you're also getting the cumulative interest and the compound interest that comes on top of it. So if you're looking to save, not only have better understanding of your business, better understanding of your finances, but you're interested in making your money work for you, I can tell you from firsthand personal experience, that was a phenomenal path to take.
I love that. Great action item. I'm going to close this out here in the last minute, and I've got the all star for you. Guys, it's not even from just this episode, but from the whole series. Because yesterday we actually talked through some of the biggest levers in your professional life with your pricing, your cost of goods sold, your fixed expenses, and the results they have when you A, increase price, B, decrease fixed expenses, C, decrease cost of goods sold. And Joe actually said, I would do all three simultaneously. And guess what?
Mm,
It's not that hard. So here it is. I want you to go back through all of your expenses and audit them. I want you to look at your fixed expenses that you haven't audited in a while, like the insurance, like even cell phone mobility bills. Some of you are paying for cell phones that aren't even being used right now, right?
mhm,
You have vehicle payments for a van you don't intend on putting out again. Maybe it's just insured and sitting there. That's all waste. That's muda, as they say in the Kaizen philosophy.
mhm,
Waste, muda. And the cost of goods sold, I want you to do an inventory audit. Look at what's being wasted. What are we buying extra? What's not being used? Focus on inventory turnover. Look at hours. See how people are following the schedule. Is it working? Find all of those little tweaks. Just do a full financial audit and then hold that against your pricing and make sure that you're priced right for the expenses you have, and then reduce as many expenses as possible. And what you're going to find is a massive, I mean, this could be 100% profit increase. And you're going to be having a brand new perspective on how much of every dollar is profit. And so put that aside. Guys, we're here with you 5 days a week to help you rise, mastering sales, simplify your pricing, and deliver premium level service. I know this series helped you with that. I cannot wait to see you guys again tomorrow for Optional Friday. Joe, thank you so much. Have a great day, guys.
always a pleasure. Take care.